Hey folks, Dan Frio here, your nationwide mortgage loan officer with today's market update. So let's get to it. So we saw mortgage rates kind of come down a little bit yesterday. They reached into the 6% range and we had a huge rally in bonds. So is this rally over or we're going to see interest rates come down even further? Well, today's topics we're going to talk about is initial jobless claims. It just came in and it wasn't as bad as expected. We also have the new Secretary of the Treasury. He's coming in and putting maybe some guardrails in on President Trump. That might be a good news there. And then we're going to go over the economic news for today. But the bond market so far is down 5 ticks. We'll get to that in a second. And the equity markets are liking whatever news is out there today. So let's get over to it. The news that we got today is right through here. It's Thursday. Not a lot of information coming in, but information that the Federal Reserve is very concerned about. Continued jobless claims. We're seeing that right through here. Continued jobless claims last reading was 1.85. It was expected to come in at 1.87. It came in at 1.88. So a little bit higher or hotter than expected. Nothing really to cause the markets to crash. Initial jobless claims was expected to come in at 214,000, came in at 219. That's good news as well. Non-farm productivity quarter over quarter. It's basically right in line with expectations. So is the labor costs. Labor costs were expected to come in at 3.4%. It came in at 3. Why is all this important? Well, we're starting to see labor costs come down, productivity going up a little bit, and the jobs market staying steady. That's great news for our economy. That's one piece of the puzzle that we're seeing right through here. And here's jobless claims rise slightly, but not a sign of trouble brewing. Says a lot of people are saying, okay, there's going to be a massive amount of unemployment. That's going to cause market reactions. That's going to push us in a recession, and it's going to be kind of downhill from there. But if that's the videos you want to watch, God bless you. But here on this channel, we're only trying to produce the facts to you guys and watch this data, and also go back and watch my videos for the last year, maybe 2 years. See how accurate I've been. Been pretty much right on the spot. So that's what we're seeing right through here. Jobless claims are coming in line. But the biggest news right now was that here's what I think the biggest news is. We have a new Secretary of the Treasury. Guy's brilliant. Okay, so he says, Bessent says Trump is focused on the 10-year Treasury yield and won't push the Fed to cut rates. I don't know if you remember about 2-3 weeks ago, the president came in and he said, I'm going to demand lower rates. Well, then as soon as Bessent is the Secretary of the Treasury, the tune changed a little bit. So let's go down through here. Here's what he's telling us now. And it was interesting at Trump's meeting the other day. He said, interest rates are okay or something of that effect. And it was like, wow, that was a 360. So what's going on in the background? Well, this young man steps into the role and he's a genius. I'll just put it that way. So what he's saying now is Trump's administration is more focused on keeping the Treasury yields low rather than what the Federal Reserve does. That's a great way to do this. You can't control the Fed. Okay, he said he and I are focused on the 10-year Treasury and what the yields are on that. And then you go down through here. Here's the 10-year Treasury. This is where we were not too long ago. Let's just go out to I'm not going to mess with that. You guys know what's going on with the Treasury. Here's the biggest point of this. Bessent indicates that Trump will not be I think it says heckling the Fed to cut as he did during his first term. That was great news for a lot of people, I guess, because the president can't demand lower rates because they can't really do that. So that's what's behind the scenes. The Federal Reserve is a independent entity. They're really not a federal government, and they're not a bank or reserve of that essence. So they're basically this entity out there that controls all of our monetary policy. So he's trying to bring them in line, but that's what the whole feud was about. So the Federal Reserve, they control, the only interest rate they control is what's called the federal funds rate. That's it. Okay, it's not mortgage rates or anything else. But what they do is they have a direct correlation to what banks do. So when the Federal Reserve interest rates up, it increases costs on banks, so the banks increase their rates. Same thing on the downward trend. So the Trump was basically coming in saying, okay, cut rates because then everything else will follow. Then he realizes, well, he doesn't have the authority to cut rates. So now what he can do is affect the 10-year Treasury. How? By fiscal monetary policy. If we don't have as much debt out there, again, if you don't glut the market with something, in 2008 we had a glut of homes. That's what caused the housing market to come down and crash. Over the past 2 years, we had a glut of government debt. So we had all this debt out there, and that's what jacked up the yields. So if we remove debt, how do you do that? Well, you put the house in fiscal policies. So they're trying to do that right now behind the scenes. If it works, hopefully everything works, it'll start driving down yields on everything. And as the 10-year Treasury drives down, you'll see also mortgage rates follow, but they're not directly the same entity. Here's what they are. Let me explain this all to you. So here's what we're seeing through here. So mortgage rates are tied to this bond rate through here. And I'll make it as interesting as I can. Here's what's happening to the price of the bond. This is how we figure out what's going on with the interest rate yields. Okay, it doesn't give us a percentage. So we have to follow what the price is doing. All you need to know is this. As the price goes up, yields go down. Okay, so we had a huge rally in the market over the last 2 days. Look, it went from here all the way up to here. And then I said, guys, there's probably going to be some profit taking because these are bonds. So what are we seeing now? Well, we saw the unemployment rate come in right on point. Everything else came in right as expected. What are we seeing today is the MBSs are down 5 ticks. That could be profit taking. It could be news. We don't know. But the 5 tick isn't really a major move. But if it's down 5 ticks, it might be enough just to teeter this up to 7%. But we'll be back at the closing bell to see how all this ends for the day. Okay, so let's get over to the last piece of the puzzle, stock market. You have the equity markets all the way across the board in green. You have oil. I don't like oil in green. You guys know how I feel about that. And we have the 10-year Treasury at 4.44. This was at 4.5 something not too long ago. So the 10-year Treasury is also coming down. Thus, you're going to see mortgage rates follow accordingly with this. So we're only down 4 ticks right now. So I'm expecting a flat market because all the data that came in today was basically right on point. And then we also go over to the CME FedWatch tool real quick. In 41 days, the Federal Reserve is going to be doing something with interest rates. What are they doing? Here, let's see what we do. I got to accept all my cookies. Let me see if that works. Let's go back and refresh the screen. So if you guys want to check out what the CME FedWatch tool is saying, just go to the CME group. It'll give you this. Here's a chart of what they expect to happen over the next meetings over the next year. And here's what's expected to happen with the Federal Reserve, if they're going to cut rates or not. Let's go through these columns. Across the top, we have the federal funds rate. Right now, we're at 4.25 and 4.5. All right, down through here, this column over here is the dates of the Federal Reserve meeting. So you can see the market's not really expecting the Federal Reserve to cut rates until maybe June at this point. I'm just going to say, let's just get through the next meeting in March, and then we're just going to take meeting by meeting because every day you can see the market is volatile. Okay, so every day rates change, and a lot of people don't understand that. But did rates go down far enough that maybe make a house affordable for you in 2025? Or maybe rates went down enough that you closed last year, and you're like, hey, Dan, I took an FHA loan, and my rate was 7.5. Can I get cut a point off of that? Well, you might be able to. How do you find that out? Well, let me take you over to my site. Okay, here's my website. All right, here's what I want you to do. If you want to figure out, okay, does this save me enough money if I refinance to really do something? Well, I can help you. If you're out there anywhere in the country and you're saying, Dan, I'd love to buy my first house, or maybe my first investment property. Are there programs out there that you offer, like DSCR programs for investors and things like that? I have all those programs. The good news is, I'm licensed in all 50 states as well as Puerto Rico. That's the good news. Even better news is, by calling me, here's our slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, I work at a federal bank, so I'm licensed all over the country. The great news about it is we're also, which is very unique, we're also a big mortgage brokerage. Okay, so think about it. If you call me, it's going to be one application, one credit pool, and I'm able to offer you all those 30 other companies, other banks, lenders, credit unions. I can offer you their rates and their programs by just going through me. So I'll handle all the heavy work. You just handle giving me all the financials. So how do you reach out to me? Go right up to the top there. Go to therateupdate.com. You can click the Apply Now button right there at the top. Or here's what I'd like you to do. Schedule a consultation. Schedule a consultation. We would love to talk with you one-on-one to see if it makes sense. Does it make sense? Can you afford to buy that first house? Do you have enough money? Does it make sense for you to refinance, or should you wait a little bit? These are all the things that we'll answer during your consultation. If you want to jump in the front of the line, or I got a little trick for you, folks. As you scroll down, you're going to see that little house right above my head. What it says right there is RateWatch. Okay, so here's a feature that we have for you. If you go into the RateWatch, you're going to tell me what rate you're looking for to refinance. What rate would it take you to refinance your mortgage? So what you're going to put in there is just your contact information, your data, your loan information, and your house value, and then what rate are you looking for? So as soon as rates hit that point, I'll get you on the phone. We'll go over the numbers, and if it makes sense, we'll get you right through the system. So that's how you do it. But to jump in the front of the line, all you need to do is scroll down to the bottom right through there. You're going to find our 800 number as well as my email address. So it's 844-775-5626 is our phone number, or email me directly at dan@therateupdate.com. And please ask a question, give me your information, give me your name, phone number. I'd love to call you to answer that question, or maybe even the other questions that you might have. But if you just have a comment, please leave that down below with the rest of the comments. But if you really need my help, please check out dan@therateupdate.com. So I'll be back here later this afternoon to show you how all this mess ends for the day. But to conclude, well, MBS's just took a dump down. We're down now 14 ticks. So come back later today. Let's see how this ends the day. Take care, folks. See you.